I'm Dan Fitzpatrick at StockMarketMentor.com, and today we're going to look at Apple. Now, here's the thing. I'd mentioned, in fact, I sent out a note earlier today talking about, and I've been talking about this a little bit lately. Don't think about Apple as a $600 stock. Think about it as a $60 stock. And I'd mentioned that the stock was trading at like, 58.20 or something like that. And I noted that if 600, which it was key resistance, 600's key resistance, in other words, 60's key resistance, does it really make sense to get long a stock that's obviously overextended when it's so close to resistance, when you have very little upside? Whereas if you wait until the stock breaks through resistance, then you have plenty of upside. Okay, well, that's what's happened. That's what's happened today. That's why I wanted to mention this. This is still a very, quote, risky trade. But here's the thing. All the best trades tend to be that way. Apple, just like the market in general, is climbing the wall of worry. I hear all these bearish comments about Apple made by the same folks who have been bearish on Apple for like 100 points or so. All those folks last week who shorted Apple, you heard them on CNBC. Well, Apple traded, couldn't get above 600, so I shorted the stock. I'm short the stock. Well, the folks on the commentators or contributors that they have on CNBC aren't the only ones that would short off of that. Let's assume that they're smart guys, and I think they pretty much are, like all of them. They're going to be covering their shorts. The stock closed above 600, and then after hours, in fact, as I do this video, it's at 604.19. Why? Well, because Apple announced they sold 3 million iPads. I noticed a guy on Fast Money, I think it was, who was basically calling BS on all of this, saying, well, there's still no way they're going to make their numbers, etc., etc. They got to do 9 million this and that and the other thing. I really don't give a rip what that guy says, and I'll tell you why. Because the stock doesn't care what he says. The stock just continues to motor higher. So how are we going to trade this? We look at the 15-minute chart. First, let me go back here a sec. No question the stock's extended. Nobody can make an argument that it's not. Look at the weekly chart. This, like Google extended, and you'll see a picture of this chart. It's extended, but it just keeps getting extendeder, for lack of a better word. That's not really a word, but it is right now today. So we've got the stock that's extended. You're not in. How do you get in? Here's one way. You look at today's action, 15-minute chart. I don't really care quite so much about that low. What I really care about is this little area of trading right in here, because this is where the the bulls made their stand and the bears withdrew, right here at about 595. Stock's at 601. So my bet is tomorrow at some point the stock's going to test 600 from the upside. If 600 holds, then go ahead and buy a bunch and then just put a stop just a little bit under 600. And when I say if it holds, it's, I can't say exactly what it's going to look like. Just if the stock doesn't go below 600, then buy some stock. On the other hand, if it does, then what you want to do is you want to look to be buying right around 596, something like that. If it does that and holds, then you can buy and you keep a tight stop. Here's the thing. Whenever I see a stock like this, that's effectively gone parabolic, you really get the sense that at some point this is going to end badly. I mentioned this a few weeks ago that I don't really see Apple, this parabolic move in Apple, ending badly, simply because the fundamentals still back this up. The stock is actually still cheap. And so this is one of those situations where, depending on where you're coming from, the chart either matters a lot or it doesn't matter at all. I will say right now it matters a lot, but this is why it matters, because I see the stock moving up along the upper Bollinger Band.